Hello and welcome back to Explain the Charts, your go-to channel for detailed market analysis. Today is October 31st, 2025, and we are diving deep into the recent explosive price action of Intel Corporation, ticker Intel. There has been a flurry of significant news surrounding Intel lately, so first we'll cover the headlines and then connect them to what we're seeing on the charts. Intel recently smashed its third-quarter earnings expectations, reporting adjusted earnings of 23 cents per share versus the 2 cents analysts predicted. This massive beat, reported on October 23rd, sent the stock soaring. However, the company's fourth-quarter guidance reportedly missed Wall Street's views, creating a mixed picture for investors to digest. Going back a bit further, investors also reacted very positively to major strategic moves in September. On September 12th, Intel announced the sale of a 51% stake in its Altera division for $3.3 billion, a move aimed at streamlining operations and focusing on core areas. This, combined with cost-cutting measures, has bolstered investor confidence in the company's restructuring efforts. Perhaps the most significant news was the historic $8.9 billion investment from the U.S. government via the CHIPS Act. This deal included a stock purchase agreement at a price of $20.47 per share, which is a critical piece of information for our chart analysis. On the technology front, Intel is pushing forward with its Panther Lake architecture on the new Intel 18A process, promising major performance gains to compete with rivals. Despite this positive news, we have seen some pullback recently, which some analysts attribute to profit-taking after the rapid run-up and underlying concerns about margins. Now, let's see how all of this plays out on the charts. Here on the daily chart, we can see the full story over the past year and a half. The most dramatic feature is the massive price drop in early August of 2024, where Intel fell from around $30 all the way down to a low near $19. Following that drop, the price based for about a month, establishing a strong support zone in the $18 to $20 range. Notice this candle on August 13th, where the price closed at exactly $20.47. This is precisely the price where the U.S. government made its large investment, effectively creating a powerful, news-backed support level. The price tested this area several times before starting its incredible ascent. The first major leg up began in mid-September, coinciding perfectly with the Altera stake sale announcement. You can see a massive gap up on September 18th, where the stock jumped from around $25 to open above $30. This move completely changed the market structure and confirmed a bullish reversal. After that surge, the price consolidated for about a month, building a base in the mid-$30s. Then, we have the second massive gap up on October 24th, the day after the blockbuster Q3 earnings report. The stock gapped from a close of about $38 to open at $40, ripping as high as $42.48 in the following days. This high at $42.48 is now our key short-term resistance level to watch. The stock has since pulled back slightly and is currently trading around the $40 mark. This price action shows a clear long-term trend reversal from bearish to strongly bullish, driven by fundamental improvements and strategic news. Let's zoom in on the daily chart from the beginning of September to get a clearer look at this powerful rally. Here we can clearly see the two major breakaway gaps that propelled the stock higher. The first gap in mid-September, following the Altera news, established a new support level around $29 to $30, which was the bottom of the gap. The stock never looked back from there. The second gap, post-earnings, has created a new support zone between the prior day's close of $38.16 and the gap-up day's low of $37.83. Traders will be watching this $38 price zone very closely. A hold above this level would be a strong sign of continuation for the bulls. Conversely, if the price were to fall and fill this gap, it could signal short-term weakness and a deeper correction. The volume on both of these gap-up days was immense, confirming strong institutional buying and conviction behind the moves. Currently, the price is in a period of consolidation after reaching the $42.48 high. This is normal and healthy after such a rapid price increase. Now let's switch to the 1-hour chart to analyze the most recent price action since the earnings report. Here we can see the peak at $42.48 was made on October 28th. Since then, the price has been in a short-term downtrend, pulling back to test lower levels. We can see that the price found some initial support around $40.90 before breaking down further. The current battle is happening right around the key psychological level of $40. This level is critical for the short-term trend. If buyers can step in and hold the price above $40, it could form a base for the next leg up. However, if sellers maintain control and push the price decisively below $40, the next logical target would be the top of that earnings gap around $38.50. The volume has been decreasing during this pullback, which could suggest that the selling pressure is waning. However, we need to see a definitive price reversal and an increase in buying volume to confirm a bottom is in. Drilling down even further to the 15-minute chart, we can see the intraday struggle over the last 2 days. On October 29th, the stock saw a significant drop from the $41.80 area down to $40.92, followed by more selling yesterday, October 30th. Yesterday's session saw the price fall from an open of $40.97 down to a low of $40.11, closing at $40.16. This shows persistent selling pressure in the very short term. Traders are watching to see if a bullish divergence forms on momentum indicators or if a clear bottoming pattern, like a double bottom or inverse head and shoulders, appears on this time frame. For now, the bears have control on the intraday chart. Returning to the daily chart for the bigger picture, let's recap what we've learned. The long-term trend has clearly shifted to bullish, supported by strong fundamentals and key news events. The bullish case is supported by the massive earnings beat, strategic restructuring, new technology, and a huge government investment that provides a perceived floor price. A break above the recent high of $42.48 would signal a continuation of this powerful uptrend, with targets potentially in the $45 to $50 range. The bearish case, in the short term, hinges on the weak Q4 guidance and the potential for a classic sell-the-news reaction after such a massive run-up. Failure to hold the $40 support level is the first warning sign for bears. A break below $40 would open the door for a test of the earnings gap support around $38. So, let's summarize the key levels and probabilities. Immediate resistance is firm at $42.48. Key support levels are at $40, followed by the gap fill area around $38.50, and then the pre-gap consolidation zone around $36. The ultimate long-term support remains at the government's purchase price of $20.47. Here are some potential scenarios. First, and most likely with a 60% probability, is a period of consolidation between $40 and $42.50 as the market digests the conflicting news. Second, with about a 30% probability, we see a deeper pullback to fill the earnings gap down towards $38.50. This would be reinforced by overall market weakness or negative sector news. A successful defense of this level would still be very constructive for the long-term trend. Finally, a less likely scenario at 10% probability is an immediate continuation of the rally, breaking through $42.50 without any significant consolidation. Keep an eye on trading volumes. A breakout on high volume is a much stronger signal. Thank you for watching this analysis on Intel. If you found this helpful, please hit the like button and subscribe to explain the charts for more in-depth content. Please remember, this video is for informational purposes only and is not financial advice. Always conduct your own research and due diligence before making any investment decisions.